So you're a Forex trader, at least it used to be, till it shut everything down and now you're looking for the next best thing. Well, here I am to save you guys. My name's Forrest here with My Funded Futures. In this video, we're going to show you the path for all of you Forex traders looking for how to utilize your skill set to continue making money on a daily basis. If you're a successful trader, then you can be successful in any market. This video is going to serve as the first in a series showing you how to get started as a futures trader. Again, if you're coming from the Forex background, they're very, very similar, but there are some key differences that I'm going to talk about here in this video. We're not going to waste too much time though. Let's jump right into it. Go ahead and hit that subscribe button though. Make sure you stay tuned to this channel. Again, this is the first in a series of videos, and watch all the way to the end to see how you can get in on a pretty cool competition happening here in March, as well as some useful discount codes and promos. Let's get into it. So let's start with the basics. What is a futures contract, right? A futures contract is a standardized legal agreement that allows you to buy or sell something at a set price at a specific set future date. So let's use an example. Imagine that you have a house and you want to sell your house in a year. Now, you don't exactly know what the value of your house is going to be in a year. Now, your house is worth about $1 million today, and someone is offering to buy it in a year for $1 million. So you go into this futures agreement with this person offering to buy your house. Now, a year passes, and let's say that the market drops off a cliff a little bit, and your house is only worth $750,000. Luckily for you, you're in a futures contract, and this person is obligated to buy your house for $1 million 1 year later. Now, the inverse could also be true, and this is where it gets really, really exciting, is that maybe the person offering to buy your house is a super smart speculator. They know that the value of your house is actually going to go up 25% instead of losing 25% of its value. And now your house is worth $1.25 million, but they get to buy it from you for $1 million. And so there is that $250K difference. On either side of that example, that's exactly how futures contracts work. So on either side of those outcomes, right, either gaining 250K in value or losing 250K in value, that is exactly how futures contracts work. So let's go ahead and look at some examples here. And here's where I wanted to go to. So there are many different types of futures contracts, guys and girls. So there's agriculture contracts, energy futures, there's metal futures, there's currency futures, and there are financial futures, things tracking indices like SPX, NDX. There are futures contracts specifically made for speculators like us, such as ESN and Q. That's what I trade. Go to my channel. You can check that stuff out. But really what we want to focus on is as prop traders, because you're probably coming from Forex prop firms. You're looking for something very similar. As a prop trader, we don't have to worry about some of the nuance of deliveries of futures contracts. So disclaimer, if you were just a normal non-prop futures trader trading maybe like, oil futures, there are many stories that you can go and Google of people having to deal with a delivery of thousands of barrels of oil or of corn or whatever it is that you're trading. So futures contracts are actually used by companies to lock in prices for tangible assets, real assets. They actually serve that purpose. They aren't entirely created for speculation. Now, in general, as traders, or at least myself, I only deal with cash settled instruments. It's less headache. Also, they tend to be more liquid, significantly more liquid, which is great for us as intraday speculators, day traders, especially as people dealing with prop firms where very often you can't hold overnight anyways. You're not swing trading. You are specifically focused on intraday speculation, i.e. day trading. So we're not dealing with this future delivery. I know that was a very long kind of explanation and disclaimer there, but it's important if you're coming from the Forex world into futures and kind of understanding what they are as an asset class. Margin is another very important topic coming from Forex versus futures. So in Forex, you have a deposit, a minimum deposit that you have to put in order to gain access to the leverage, right? And there's a minimum factor. In futures, it's different. And so you have something called span margin, which can change depending on volatility in the market. So I'll give some pretty quick examples, and then I'll talk about how it works in the prop trading world. You can read here what's on the screen. Actually, I'll just read it to you. So futures trading uses a different system than the deposit-based system, Forex, called span margin, which is a system that determines margin requirements according to a global total portfolio assessment of the one-day risk for a trader's account. Span margin can be less predictable than Forex margin and can suddenly spike in response to market volatility. And that does happen. If you trade futures in your personal account, your intraday margin can increase on a dime. If you have experience trading other things like equities, you know the equity margin can increase as well. But let's keep it very, very simple. What does it actually look like? Okay, so typically in most accounts, like if you open a personal account for ES, it's going to require $12,500 of account value for one contract, per contract. Let's say per contract. So in order to trade one ES, which is the chart I have here in the background, you're going to need $12,500. Okay. In order to trade two ES, you would need what's 12,500 times 5. I think that's $25,000. It's $25,000. It's quite a bit of money. That's the example for one account. If you want to do two contracts, you need $25,000, which is why using my funded futures, you're able to get 10 accounts for just a couple $100. The leverage is actually insane. For NQ, we modify this, add another line. For NQ, it's $18,000 and some change account value per contract. And that can spike. Those margin requirements can double when there's volatility. So you have to ask yourself, do you want to save up over $120,000 just to have access to 10 contracts? That's the question. That's where prop trading comes into play. And that's why there's so many prop traders today, what people are finding so useful. I trade futures in my personal account as well, but still, in order for me to have access to 10 contracts in my personal account, you have to keep large sums of money there. So prop trading is the way, guys. It's a smart tool. It's a great asset, which is why we're talking about it here and why you're looking at this video. So how do these values work across these different types of assets? We mentioned earlier that there are many different types of futures. So let's talk about how the charts work. I have this ES chart in the background, and you can kind of see here how we're in the 5,000s. Okay. I'm not going to do any TA in this video. We'll get to that. Check out my channel, Force Trading. We do tons of TA and stuff like that all the time. But we can see here that we're in the 5,000s. 5,024.25 is price on the right side of the screen right now. The actual value of the change in price is a concept that you need to understand. So this is the most important part of the video. So I really want you to lock into this part of the video because this is what's most relevant to trading. You know, all the different history and futures and things like that. Ultimately, you're here to speculate on the price, and the changes in the price are going to determine how much money you make. So that's what we're talking about right here. Lock it in, guys. So in gold futures, the minimum tick amount is 10 cents, which equals $10. In ES, E-mini S&P 500 futures, which is the chart we're looking at here, the minimum tick amount is 25 cents, which is equal to $12.50. In NQ, the minimum tick amount is 25 cents, which equals $5. And in oil futures, the minimum tick is 1 cent, which is equal to $10. So we're going to look at some examples to break this down. And we're going to start with ES, E-mini S&P 500 futures, because we're on this chart right here. So if I zoom in on this chart right here, and I measure the change in price, this is TradingView for those of you who aren't familiar with this charting tool, pretty standardly used charting tool. I want to look at the change in price of just this one candle here. Okay, so I can measure it from bottom to top. It's 3.75 points. Okay, so let's write some stuff down. It's 3.75 points. This green candle, 3.75 points, or we can say $3.75 change in price of the index. Yes, say the index / futures. 3.75 points. Now, what does it say here? The minimum tick amount is 25 cents. So 3.75 points is $3.75. So if a tick is 25 cents, 4 ticks is a point, 4 ticks is $1. Okay, 0.25 times 4 gives us $1. Call those points in the future trading world. So we got 1 point here, and each tick is worth $12.50. So it's simple math. Okay, there's a few ways that we could do this. We could do 3.75 divided by 0.25 times $12.50. Another way to do this is to just look at the measurement again. We can see here on the right side, it says -15. So it's 3.75, -15, that's the points. So 16 points would be $4 and 15 points is $3.75. Okay. Now I know that 1 point on ES is $50. That's how I typically think of it. But a tick, we do want to remember the minimum tick value. The minimum tick value is the amount that these ES can actually change in price. Okay. So ES will never be 5,023.63. It's always going to be, last digit's always going to end in a 0, 0.25, 0.5, 0.75, and then back up to the next dollar. Okay. Very, very important. So the value of this 3.75 is 15 ticks. We open the calculator. 15 times 12.50 is $187.50. Cool. So that's $187.50 change on ES. So let's look at some other examples. Look at NQ. I have this handy dandy chart open. We'll expand the NQ chart trading view, and let's just measure this move from top to bottom, 797 points. Now let's go back to our chart here. It says the minimum tick amount is 25 cents, which equals $5. Okay, so 1 point on NQ, if it moves 25 cents, $5, that means 1 point is $20. Okay, 4 quarters in a dollar, 4 times 5 is 20. Sticking with me? Let's go here. We see here that this was a $199.25 move, which was 797 ticks. So it doesn't matter kind of which way, how you multiply this by. You could do 199.25 times 20. So multiply how many points it was times $20 per point, or you could do 797 times 5. You're gonna get the same number. So let's do 797 times 5. We see that's a $3,985 move, or we can do 199.25 times 20. We see that's a $3,985 move. It's the exact same number. Again, we'll do 797 times 5, 3,985. Remember that number, 3,985. Or we could do 199.25 times 20. Okay, 1 point on NQ is equal to $20. 199.25 times 20 gives us that value. I trade NQ every day, by the way. If you're signing up for My Funded Futures today at the end of this video, hop on over and we can start trading with you. Let's go back to the presentation. So oil futures, the minimum tick amount is 1 cent, which equals to $10. So oil is another example of a very high leverage product. What I mean by that, let's go to CL, which is the ticker for oil, and can't actually see the chart here. Let's go to 1 day. I think my trading view exploded. Well, we're not going to look at oil futures then. It's not going to load the chart. There we go. Not sure why that was broken. So we can see here that we have quite a bit of price action, but because the tick amount is so small, it's 1 cent, that this price action is only going down $1.10. But on the right, we see that that's a negative 110 ticks. So it's a $1.10 change, but down 110 ticks. Now I know off the top of my head that 1 cent, there's 100 pennies in a dollar. Each one is worth 10 cents. That means that every dollar change in CL is worth $1,000. So this move right here is $1,000. Or we can do this, we want to do this top to bottom again. It's 109 tickets, 109 ticks. It's 109 times 10, guys, $1,090. Cool. So go ahead and rewind this part of the video if you need to. Measure it on your own charts. The math is pretty simple. Okay, check it out. Another way to think of this, the minimum tick amount is necessary to just know that this is how these prices move, and it's not the same per asset. So gold moves in ticks of 10 cents. So gold will never end in a price of 0.07 or 0.08. Okay. ES moves in prices of 25 cents. So you'll never see ES end in a 0.3 or 0.4. It's literally impossible. Same with NQ. They both have a tick of 25 cents. The values of those ticks are different though. For ES is 12.50. So 4 ticks is equal to $50. 1 point on ES is worth $50. 1 point on NQ is worth $20. And in oil, 1 point is worth how much? $1,000. Okay. Different assets, different tick amounts, different tick values. Primary difference between Forex and futures is that you're speculating on the change in price, and that change in price, the amount of ticks that it moves is the value that you make. Actually long or short these assets, right? You're not getting a % ROI on dollars. You are getting paid based off of the change in the number of ticks when you get in and when you get out. Just speaking of fees in general, all prop firms have them. Again, the reason that you're signing up to a prop firm, the reason that you would choose My Funded Futures, for example, is their background in this space. They already have a huge brand, a huge amount of trust, which is why I decided to partner with them, and why you're looking at my face on their screen right now. Literally every day, people email me asking me to either talk about their brand or evaluate them. So this was a very tactical choice for me, just due to their pedigree in this space, which is why I'm here on their channel. And I'm excited to do this series with them for you. Okay. The leverage that you're getting from a prop firm, a couple $100 in, gives you access to 10 contracts, which if you were going to use your own money, you need over $120,000, if not more, depending on what you're trading, which is just totally inaccessible for most people, right? If you're trying to start trading, you have a 9 to 5, or you're making, $60,000, $70,000 a year, you're just not going to have, within your lifetime, the ability to access that type of leverage unless you use something like My Funded Futures. So, hey, Future Force jumping in here. Thanks, Past Force. For the latest promotion details, guys, please check the pinned comment below. If you want to always get the best discount available, use code FORCE TRADING. That is FORCE TRADING, FORCE TRADING. That will give you the best of whatever the current promotion is. Okay, so regardless of whenever you watch this video, if you want access to the latest discount, the best discount, whatever promotion we have going on, check the description. Check the pinned comment. Definitely play it safe by using code FORCE TRADING. back to the video. The March competition. There's a competition in March, which is pretty exciting. So let's scan over to look at the competition. We'll first talk about the prizes, and then we'll talk about the rules. First place, 25K live account. Second place, 10K live account. Third place, 5K live account. Fourth place, 4th through 10th, get a 30K static simulated funded account. This is also just a really fun thing to do. So let's actually take a look at the rules. I will say this is free to join if you already have an account. So you've already entered. You go and buy an account, you've already entered. But the actual rules, you're getting a $10,000 account. You get 1 mini or 10 micros, and you have 10K of drawdown. So this is like a static account. You basically have a 10K real dollar account you're getting access to trade in this competition. There's a leaderboard, so you can see how everybody's doing at all times. You see here that there's 10K of drawdown. Scalping is allowed. News trading is allowed. You're not allowed to hedge or DCA, which means you kind of have to just get into your position and let it play out. There's no overnight trading, no resets because it's competition. It's real-time ranking. It's just everybody as they trade. You can see how their accounts are doing. And at the end of March, whoever did the best did the best. So it's a really cool way to kind of test your mettle in a new way. I'll do this. I don't know that I'll win, but I'm going to do the competition as well. Yeah, why not? Let's see. I would love to see how I rank overall with my trading style, my risk management style. And ultimately, it's just a good way to participate in the markets, guys. So I highly encourage all of you to sign up, and I hope to see you there. That's why we're going to do a series, guys. I know you still have more questions. If you do have more questions, please absolutely do put them below in the comments. I will address them in futures videos. The very next video after this is going to be talking about, actually more hands-on, in-depth, getting started with my funded futures and making your first trade, how to trade in general, digging into history of futures, all the different things that you might want to know about futures, different trading strategies, how to pass accounts, okay? And you can always go to my channel for more information as well. Otherwise, this video, if I did all that in one video, this would be like a 7-hour video. And let's be honest, ain't nobody got time for that. My name is Forrest. Please reach out to me if you need help. This is my passion. That's why I do this. I love doing this. I love seeing people win. I want you to win. Let me know how your journey goes with my funded futures, my experience. They're super, super all ears. So again, good or bad, comment it below, reach out for help. We're here to help. We want to see as many people be as successful as possible. Like, subscribe, and see you in the next one. Peace.